Hello. Tuesday, May 13th, 2025. Let's talk about the price action in the stock market yesterday after the announcement of the 90-day delay in tariffs Sunday evening. And let's see what happened because it's interesting from many angles. So before we start, there is no investment advice in this video. So what happened after the announcement? The market, the futures gap up, and there was a huge move. We can see this here in the 5-minute chart of the SPY, the S&P 500, I'm sorry. It gapped up about 140 points, and then they stayed during the day in a tight range of about 50 points. This is peculiar because someone or some funds or some traders beat up the market, mainly the futures, as we will see, because they thought or they were supposed to think that this is very bullish for the market, when essentially it's a 90-day pause and the underlying factors that have created this mess are intact, and it's quite uncertain whether there will be a resolution in the near future, and possibly more turmoil lies ahead. So who bought and why, we can never know. This is what happened, a huge move. Let's look at the futures. So they moved 1.5% from the close of the previous day, that was Friday, and then during the day from the open to close they gained 1.8%. It's interesting to also look at the futures in terms of points changes here. This is quite interesting. 83 points from the previous close when the futures markets opens, the Globex, and this is the largest ever since the futures started overnight change in the futures. And this is important because this changes directly translate to P&L. And you see the open to close was 104 points. So this chart is quite revealing from the point of view of risk management, and it shows that it's very hard to trade futures nowadays with like a $30,000 capital or even 50,000. You need at least 100K to just trade one contract of the E-mini, because these changes are very large changes, and they can happen like you see over here. The after, I think it was April 9th when they announced the reversal of the tariffs temporarily, and you see this large move. So if you lose like 100 points if you are short, and you are losing like 5,000, that's 5% loss in just one trade. That's too big. That's too big for even 100K capital. It's tremendously big for like a 30,000 capital. So this chart, in terms of points, it gives you an idea how challenging trading has become in index futures, and especially the E-mini. So let's move forward. What we see here, it's very, very interesting. This is the SPY and SPY ETF. Price jumped above the 200-day moving average, and this breakout, it's kind of unique. I have done some analysis here for you. First of all, the year-to-date loss from about 3.3% goes reduced to just like 0.2%. From about 18% drawdown this year, we're down to about 4.6. So let's see what I have done here. I have found all the occasions where the gain was 3% or more, and the previous day was below the 200-day moving average, and the next day the market went up above and stayed above the 200-day moving average, and the forward one-day return is shown here, and the 5 days and 21 days. It's interesting to see that after 2020, rather after 2011, the 5-day return has remained, forward return has remained negative, and after 2020, even the 21-day forward return has remained negative. And although the sample is small, what it tells you is that you cannot have certainty that these breakouts above the 200 moving average will necessarily be profitable. Okay, and here you see the hypothetical trades or signals that this happened after 2020. These signals haven't been profitable in the up to next 21 days that I tested. This is the last one, and this is something interesting to notice. I don't like to talk about market manipulation because there is no way to prove this manipulation, but all these moves and the random decisions to announce tariffs and then take them back, I believe fall in the realms of financial engineering. When there is a negative decision like to impose tariffs, the market falls, but there is hope. So it doesn't fall that much. But when they are reversed, the decisions, the market, it's like a spring, and the market takes off. But really, nothing has changed. If not, things have become worse. Nothing has changed since the time the market was down 18%. The deficit is accumulating, and tax cuts will push the deficit higher, and bond yields we have a bear steepener. The yields are rising, and I don't think there is a reason for the market to celebrate the stock market unless some I don't know, I'm speculating, some big funds are driving price higher and they are squeezing out the shorts, like the CTAs, the commodity trading advisors, they were caught short. Our program, our system exited on May 1st with a loss, stop loss. And these trend following systems, they take losses very frequently in anticipation of a large gain and uptrend. But some CTAs go short and also short the US dollar, and yesterday they got crushed by the market move. So CTAs lost, and short traders lost, and many passive investors were out of the market. They have moved to T-bills. I know many people personally who have moved to money market funds, and they are not in stocks. So the algos operate intraday, as you see that the tight range during the day. So who is benefiting and who is creating these moves? I don't know. I don't have any answers. There is a lot of speculation in the market. The level of speculation has increased significantly after the pandemic, with options and zero-day options and many new financial instruments, ETFs, strategy ETFs, probably some foreign ETFs were imbalancing, but usually these ETFs, they rebalance at the end of the day. I'm not an expert in the mechanics of this, but this gap looks suspicious to me. And as you saw, in terms of points in the E-mini, it was the largest gap ever, up gap. And although that is kind of could be kind of misleading due to the price change, nevertheless, it reflects. It has a direct connection to the P&L per contract. So you have to look at both. You have to look at the percent changes and the changes in points. The P&L is determined by the changes in terms of points and using the base point value in the futures. So what is happening here? We will see in the next few days. The market is retreating today, May the 13th, and gold is recovering after getting hit yesterday, and also the dollar is falling. We will see how this goes, and it's a challenging time, especially for systematic strategies, because of the lags of the indicators, and but over the long term, systematic strategies, the robust ones, they emerge winners, while traders that try to guess the markets, they get hit by a few big losses, and are discouraged or are forced out of the market due to an uncalled point. So this is my update. If you want to follow my work, here is some information, website. If you don't have the free trading book that was published by Willie in 2008, an introductory book on trading, profitability, systematic trading, you can subscribe and get that. Also, I have here some ways to find my work, Substack, X, Bsky, 2 YouTube channels, and Medium. If you like this video and you want to see more videos like this with information about the market, please subscribe and hit the like button, because this is the only way for me to get the motivation to publish more videos. Thank you very much. Have a nice day.